Hello and welcome to the weekly Limit Up podcast. My name is Don Collins, Chartered Accountant and Business Advisor of 30 years. I'm a partner at Findex, a leading financial and advisory and accounting services firm in Australia and New Zealand. I'm here with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder.
Morning, Don.
Ian, tell me about the last week's trading.
Yeah, so background is US government still shut, although Trump managed to find a very convenient CPI number that was slightly lower than expected. That was the only number he's managed to find so far. You might say it's actually the job of the Bureau of Labour Statistics, but he sacked the head and put in his own person.
And came up with his own number?
Yeah, nothing else come out, so we don't get any other numbers. Potential deal with China today, although China doesn't seem so pleased about it, so usual Trump stuff. Chinese economy still slowing down, house prices still falling for 4 years, I think that is now. CPI suddenly going up in Canada,
right?
Not a good look. But really the backdrop is investors think they're going to get a load of free money, cheap rates, QE, all that sort of stuff, because Trump needs rates down and needs them down a lot. And they think the Fed are going to cave into him.
Okay. Interesting. Tell me about the charts then.
All right.
So Ian, show us the charts for the last week.
Yeah, so one really good thing about Bitcoin this week is it's had a really nice bounce. Short-term trends stopping it, and as you can see as it goes through it, it accelerates. On a longer term, this is a weekly, it's really still in the same rectangle pattern.
Yep.
That has stayed the same, so all of the fear last week really hadn't got anywhere. And if you look at it on a monthly pattern, then clearly, although there have been lots of ups and downs with the 4-year cycle and 80%, 90% drawdowns,
yep,
you have to say that since this bottom here in 23, we haven't had anywhere near such big drawdowns and seem to be plotting a relatively steady course.
Okay.
Unlike our friends back at Silver, whose charts we've been looking at in the last few weeks, but that's the S&P. Silver, there we are.
Wow.
So, Silver's gone from $16 to $54, and all this move up was just insane. A parabola that can't support itself, and as you can see from that chart, it didn't. When you see lines of people at the Mint, I think in Sydney was it, queuing up to buy their silver coins,
yes,
you know there's a big crash coming because the dumb money's in.
Yes.
But, long term, weekly trend, not so bad. We've just, got back on a different, less steep road. And on the monthly chart, let me just go to the monthly. Give me one sec. And the monthly chart, well, that does look quite insane actually, but really it's still positive for the month.
Yep.
It is what it is. Gold equally had a similar stopping point.
Again, people lining up with their bits of gold to cash in.
Yeah, and so the gold chart is really nice. I'll show you that in the weekly minute, but we've had a long 2 years accumulation of price, ending in the blow off top here, which looks more understandable when we look at it from the weekly chart. So there you can see a really positive trend that we've just kind of dropped out of, and you can see where we originally broke out from 2020 to 2024. We were trying to get above $2,000. Now it's all the way up at $4,300, or it was till this time last week.
Yep.
And you can really see where we had a consolidation period at 3,500.
Yes.
And you can see the tightness, it getting tighter and tighter and tighter until it blows its top.
Yep. Yep.
And this was the big point which created this parabola, all that pressure building up in there.
Mm-hmm.
Equally, we can have a look at gold here as well, and you see, yeah, I mean, it's still way above where it should be. If this is what the 9-period channel, so this is the average, the moving average for every 9 months.
Yep.
And it's just going steadily up, but price is now well ahead of itself.
Yes.
And needs to correct.
Correct. Yep.
So those are two failed trends, gold and silver, and one trend that's still going in Bitcoin. With all the fear and doom that all the talking heads are going on about in stock markets, bubble being burst, blah blah blah, it kind of did break its trend on the S&P 500, but really it had one bad day and hasn't got below it, and has now reappeared on Friday thanks to the US CPI at an all-time high and back in the trend.
Mm-hmm.
So I would say there's going to be a really big short squeeze to take it a lot higher, because lots of people trapped in short positions with the price going against it. And the trend that started in the last week is dollar yen against a backdrop of a very stable Dixie, which is a futures contract of dollar against other currencies, mainly euro, yen, sterling, etc.
Yep.
And relatively stable against other countries, but with the new Prime Minister, who is quite dovish, rather in opposition to the hawkishness of the Ministry of Finance and the Bank of Japan. We've had not only 50,000 Nikkei Dow stock market rally, first time ever, but we've had this big rally in dollar yen. And as you can see, we created a trend from what was pretty much a rough trend before, although these are valid in that it didn't close above the breakout high 3 times.
Yep.
And we broke out here and confirmed, but then it came down, but this long wick here is really propelling it higher, and we've gone right through the roof here. This is a really interesting one, because at 157, 158, which is pretty much at the high of the trend line, that's where 3 years ago Bank of Japan was intervening, selling dollars for yen. So market would be expected that. But anyway, we've got a bit to go, but that is the trend at the moment, a weakening yen.
Okay, thank you. Thanks, Ian. So what's up in the next week?
Well, it's a big week. 4 central bank monetary policy meetings. Federal Reserve in America on Wednesday, as we discussed earlier, expected to cut rates. Bank of Canada, don't know what they're going to do. They need to cut rates, but they've got higher inflation. Bank of Japan, we talked about that as well, and the ECB as well on Thursday. And on Friday, US PCE, which is the, assuming it comes out, of course, is the Fed's favoured measure of inflation. So all of this stuff is building up to these people executing it for the market, and everyone going, woo, let's push it up.
Sounds all exciting, and look forward to unwrapping that all in the next week.
Awesome, thanks Don.
Thanks, Ian, and look forward to everyone tuning in next week. Thank you.